if foreign investors wanted to reduce Indian exposure because of slowdown in growth or because of political uncertainty, they would have done it in the last 2 years. We've probably seen the worst of slow growth and political uncertainty in the last 2 years. I would say in the last 6 months or so, more particularly after Chidambaram took over as FM, there has actually been fairly large, doses of reforms which have been induced in the Indian economy, and the outlook for Indian economy now is much better. We had this twin deficits which were really troubling and they were going out of control. Now today is a situation where both these two deficits are pretty much under control. The fiscal deficit is under control. FM has just mentioned it a few days ago, and the trade deficit also is carries pretty much at a much benign level. So by and large, the situation which was there in 2 years ago and the situation now is far better for India. So from a foreign investor's point of view, when they look at India and look at Indian equities, they see a recovery, they see an improvement in economic fundamentals, they see an improvement in earnings compared to many other countries where the earnings actually are still declining, compared to other countries where there are still issues. And so it is not only an India specific trade, but it is also a relative trade which with some of the foreign institutional investors are doing. And in the group of emerging markets or the basket of emerging markets where they have where they can invest into, India is probably standing out, and that is probably the reason why we've seen fairly large portfolio allocation continuing to India. India also has a good set of mix of companies in consumers, in IT, in other areas, in pharmaceuticals, where it is these are very good companies gaining market share not only in India but also across the world. And it is these good quality companies where the foreign institutional investors are investing into. So it's a combination of better economic recovery, better outlook, more positive outlook towards India, and good quality of companies which is driving FI flows. Whether it will continue in the future, nobody really knows. But hopefully, we've seen worse behind, and the flows were good. So, if the environment actually improves, we will probably see same continuity or better investment flows in the years to come. We probably will see a lower amount of money going into EM debt. However, India is different because of the massive improvement that we have seen in the current account deficit. The projection for currency, for Indian currency, is now far more stable, and that has prompted some investors to come back to India because the yields are still very attractive.